Welcome everybody. Good morning. This is the Saturday morning Viper Trading webinar. If you're here to learn about trading futures markets using Viper tools, you're absolutely in the right place. This is part two of a two-part series. See the trade ahead of time. In part one last Thursday evening, we covered a lot of the basics of how to see trades, sort of projected beyond the right-hand side out into the future. And today we're going to try to cover some more advanced topics. Excuse me. But first, we have to take care of our standard disclaimer. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Great. Okay. See, I get a little tickle in my throat today. My apologies. We'll be all right. Let's get over here to screen one. So I'm going to start off with a recap from last Thursday, so we're all kind of on the same page. And then we're going to do a series of exercises. Excuse me. I think I'm going to go ahead and take a quick sip of tea. Stand by. There we go. That's better. All right. Everybody see my cursor moving? Can you see the ES chart, 4-range chart on the screen? Cursor moving in the middle of the chart. Toby? Yeah? Everybody see it? All right, good. Okay, just we got some visitors and new folks in here, just trying to understand what you're looking at. This is we connected to a data feed to our broker, NinjaTrader. And of course, this is the NinjaTrader platform we trade on. And this is a 4-range chart. We prefer range bars. We have for years. And we like the way they handle the price action, the volatility. And if you didn't have any indicators on here, this would just be a bunch of bars sort of going up and down and sideways and be very difficult to see how and where to trade it. So we created these indicators, which are the background colors, the bar colors, the swing levels, which are the dots and the swings you see here. The power meters are the trends, 4 trends on the chart. Predictors, support and resistance. And of course, the bands. The thick band in the middle, as everybody knows here, is the mid band. And 1, 2, 3, 4 above, 1, 2, 3, 4 below. Line 2 is the thin red line above band number 2. And the thin green line is line 6 above band 6. 6, 7, 8 are the top bands above it. Now, how do we trade that? Several different ways, and I'm going to cover the 3 ways. I'm going to focus, if you recall from, if you've been in the live trading room, the mid band, which is the thick line in the middle here, features prominently in our trading. We like mid-band trades. That's, most of you know, of course, that's my go-to trade. When the price, either up or down, comes at or near the mid-band, that triggers trades, either long or short. And we'll get into details about that. I'm just talking at a very high level right now. The other bands that come into play are line 6, which is right here, and line 2, which is right here. Now, for the purpose of simplicity in this webinar, I'm going to keep it really, really simple. When the background is red, the bars are predominantly red, and you are getting what's called a series of lower highs and lower lows, you are said to be in what's called a downtrend. So, pop quiz to make sure everybody has had their coffee and is awake. What kinds of trades do we take in downtrends? Are we buying support in downtrends? So, let's see here. I'm going to type this in. Downtrend equals blank types of trades. Fill in the blank. Well, there's only two choices. You got a 50-50 shot. You're either getting long or buying, or selling and getting short in downtrends. Man, my wife's making some chicken adobo. She's really smelling up the house already. Guess that's a good thing. Yeah, you're selling short. You're selling short trades at resistance, right? Now, let's contrast that with an uptrend. Here's an example of a downtrend over here to the left. From here over to here would be downtrend. Now, to the right, of course, you can see the market is going up. So the opposite of that is what we call an uptrend. Long trades only. Now, that's the easy part. I think everybody would agree. That's a pretty obvious statement. Sell short in downtrends. Buy long at support on uptrends. Okay, that's kind of a no-brainer. Now, what's the tricky part? Well, the tricky part is knowing where to get in to take the trade, yes? Let's talk about the three different areas and how they work in the different trend setups. I'm going to start with the downtrend. Now, there are three different types of trades that we take. So let's go back here. Where's that little downtrend? Here, let's keep that in place so we can see it, so we're all on the same page here. We're going to start with the downtrend. Now, the way the downtrend works is that in order to sort of trigger or set up what turns out to be a downtrend, is you need what's called a thrust in the down direction. That's how downtrends start, right? So here is an example of a thrust in a down direction. Right? Background turns red. The most recent swing levels are broken to the downside. The bars turn red in color. Generally speaking, a red stealth line will show up, which is the sort of sneaky snake looking line here. And most prominently, the mid-band and all of the bands around it will stair-step down. This is the first most prominent feature indicating that you are going into a downtrend. Now, the tempting thing to do, and this is probably one of the tough, if you've been trading for any period of time, you would agree with this, is the temptation not to get into a trade on the thrusting part of the move. So what happens is, the market starts to push down, and then sure enough, by the time it gets down here, you're convinced that you're going, that it's going down in here, and you want to pull the trigger. Well, if you've ever done that and you get stopped out, it's because inevitably markets do retracements, pullbacks. And so if you're getting into thrust moves right at the apex of the thrust and getting stopped out over and over and over again, it's because you're getting in at these lowest levels. You got a 10, 12 tick stop, which is up here somewhere. And sure enough, every retracement takes them out. Anybody dealing with that problem right now? I know some of you are. I know I did for a very, very long time trading. It was really hard for me to get the concept. I mean, well, that's not fair. I got the concept of it. I understood that I should be buying and selling retracements or pullbacks to support and resistance. You could say that to me and I'd nod my head and agree with it and totally understand it, but doing it was a whole other thing. And the reason for that is that psychologically, you're seeing a thing, you're seeing these movements, you're seeing these thrust movements, and what happens is by the time they get to their apex, that's when you're convinced that the move is up or down. But of course, everybody knows and can see here that's the worst point to get in. So somehow you have to find a way to sort of, how would I say, almost sort of tie your hands when you're getting that feeling in the thrust part. Okay? And just say to yourself, and this is really important, if you take anything away from this morning, it would be this. Just say to yourself, you know what? I cannot take a trade, sort of mentally, as you're preparing to take these trades, unless it is at one of three places. It's got to be at or around the midband. It's got to be at or around line 6. And it's got to be somewhere at or around line 2. And when a market is pushing in a very precipitous way away from these three locations, you have to realize that this is the spot that you absolutely do not take trades. Okay, this is the first critical thing about being successful in your trading, is knowing where you should absolutely not get in. Waiting is the key, Lewis. That's right. And I see some of you typed in, yes, that's me. And that's okay. At least you're trying, and that's the important part. At least you're trying to get it done. Now, let's talk about retracements. All retracements are not created equal. Let me get into detail about this, because this is kind of the juice of taking the trades, right? Now, in a downtrend, we are looking for shorts. We know that. And we're looking for shorts on a rollover at resistance. So you'll hear in the room things like this. I'm looking for a kiss and roll anywhere up around 96 on ES. If it came up around the midband and kissed and rolled, I would be looking for a short. So let's just look at some examples, and then we'll talk about the detail of how you get in. Okay. Here we can see the market came back and kissed and rolled off the midband. So this is what kind of trade right here. This is a short, right? Okay, let's look at a couple other ones. Here's another one right here. Market retraces in the downtrend right to the midband, kisses it with the wick of a candle, yes, and then rolls. Short trade, right? Right? Okay, let's look at a couple more. Now, this one here is called a deep retracement because it goes beyond the midband and even goes so far as to change the background color. This is where a lot of people get faked into thinking that the trend has changed and now the trend is up. Bars turn blue, you're above the midband, background color has changed. This has to be an uptrend now. Why is this not an uptrend? Anybody? Why is that not an uptrend? Bars are blue, you're above the midband, background color changed. What would need to happen to confirm an uptrend trend change from that swing? Something would have to happen, right? Which obviously you can see did not happen. Higher highs, higher lows, right? Breaking swings, higher levels of support. So think about it just because we're all comfortable here on a nice Saturday morning. We don't have the market shooting at us and making, feeling the pressure to get in and out of live trades. So we can relax and think about it intuitively for a little bit here. So let's talk about this. Now, for a real trend change to occur, would not this have to happen? A thrust, a pullback to some higher low support area, and then a follow through like such. Now, if this occurred, I think everybody in here this morning would agree that this would be clearly a trend change, yes? That would be a trend change. However, is this what happened? No, that's not what happened. So, when you have a deep retracement, it stays usually underneath some kind of swing support level or swing resistance level. In this case, that would be here. So to summarize here, from a short point of view, in a downtrend, we have three entry possibilities. The midband, which there are three examples here on this chart. There's another kiss and roll right here to the short side. You have a deep retracement, which comes out in the case of the downtrend to line 6. And then we have what's called minimum criteria trades. Let me see if I could find an example of a minimum criteria trade. Here's another mid-band kiss and roll right here. Now, I'm going to show an uptrend on the long side of this setup, and then we're going to start doing some exercises. Okay? Let me see if I can find a minimum criteria trade example for you, which comes to another deep retracement here. See it? Just exactly like that one. I'll tell you what, if you can, I'm telling you something, if you can really work on teaching and training your mind's eye to see these 3 spots, and it's really healthy to try to, and it's one of those things where it's your brain's a muscle and muscle memory, right? And if you can train it to just focus on those 3 lines, in and around these 3 lines, you can see that on ES, this entire morning of this day, which I think was Friday, Friday was the 8th, right? Yeah, so this is early Friday morning. I'm here in California, Pacific time, so midnight was right here. Of course, to the left is the end of the Asian session over here, which started the downtrend, and then it continued into the European session right over here, with many mid-band kiss and rolls and a couple of deep retracements like such. It does make a difference if the mid-band is flat, Raymond. So let's talk about this. There are cases where a market will go sort of vociferously in and I'll show this in a minute in terms of an uptrend. And then there are times where a market will do something like you see here, which is sort of downward movement, but punctuated with periods of sideways movement. So here's a good example right here. So the term we would use here would be sideways to down. Sideways to down, meaning that it's still a downtrend, from an overall technical point of view. However, the market is going sideways. So characteristics of that, of course, are that the bands and the mid-band are all, flat. So this is definitely a sideways market, but the trend is down. So sideways to down, you're still looking for shorts, right? Same thing over here. Here's another little sort of sideways to down period right in here. Background is predominantly red. Bars are predominantly red. You're still taking short trades only, right? But the bands and the mid-band are flat. So it is sideways to down. Sideways to down, another deep retracement, kiss and mid-band roll kiss here, all short, 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 short. You can start to see them now, right? You're starting to see them pretty clearly. Now, let's go over and look at the opposite of that, which is an uptrend. Now, here is a case. This is the last case of where you had a deep retracement short, and unlike the other cases where that happened over here, let's contrast something so this really becomes clear in your mind's eye as you envision what's happening here. Here's the last deep retracement coming out of the downtrend right here. Right? There it is. Everybody sees it. Still in downtrend, deep retracement. Well, no, I'm sorry. That's the next to the last one. Here's the last one right here. Now, if we look at this one versus this one, you can clearly see what the difference is. What's the difference between this deep retracement here and this deep retracement over here? Well, it's clear that the follow through of what it does after it hits resistance. Right? Let's look at our examples. Here on the left, we have 3 examples. 1, 2, 3 deep retracements that all resulted in beautiful short trade follow through back to the downside in the downtrend. Right? All beautiful shorts that panned out. 1, 2, 3. Now, We come over here to the fourth one, and true, that is a short trade. No question about it, on a deep retracement to line 6 in a downtrend. However, what happened afterwards? Did we get the follow through like this with downtrend continuance, as happened over here? No, we did not. In fact, quite the contrary happened. We got a higher low right around the midband, and the market broke to the upside, giving you a clear trend change. That is a higher low. That's your first breadcrumb clue, Lewis, Rich. That's exactly right. Your first clue that a trend change is afoot is this higher low right here. We did not go down to check the lows, and then obviously hindsight's 2020. You would look back here and say, that's a double bottom down here, right around 82, 81, 82. Boom, boom, double bottom, trend change to the upside. Now, the characteristic of a trend change to the upside, of course, is that a swing level will be broken to the upside. A higher low, or I didn't want that yellow one, I just want a blue one. Where's that blue line right here? Right here you can see that the swing is taken out to the upside. You get the higher low, we talked about that. Background will turn green. Bars will become predominantly blue. And what happens to the band and the midbands? They start stair-stepping up, which is quite the opposite of the downtrend. Now you're going up, yes? So we know we're getting long in uptrends, and we're going to look at that in a second. But where do we get long in uptrends? Where do we get long? Well, let's think about it. Would be the opposite of a downtrend, right? We talked about our lines are still in play. Midband, line 2, and line 6, right? So let's go ahead and advance this, and let's look at spots where you would get long. We have some examples right here. Now, these are two examples of what we call, midband, line 2, and line 6 all come into play, yes? Let's look at what we call minimum criteria in a long trend, in an uptrend taking longs. So when we say minimum criteria, we mean that in the trend direction, the closest line to the trend and the corresponding stealth line are broken, triggering the trade. So let's look at some examples. Notice right here in this retracement. So here again, I'm going to keep saying this so it gets kind of ingrained in everybody, right? Okay, so here's the thrust, part of this move, leg, if you will. Here's the sneaky snake green stealth line, right? Here's midband, here's line 6. So you need a bar or series of bars to close below the stealth line and line 6 right here. So this is an example of what we call a minimum criteria retracement in a long trade to get in a uptrend to get long right here. Is there another one here? Yep. Now, if these two retracements, so let me draw it in here so it's clear. Here's a push up to a little bit of a short-term double top retracement underneath stealth and line 6, and then the final push up to the top at the close of the market on Friday. Of course, you can see that if this market had come back into here and bounced, it would be called what? If they came a little bit deeper and came to here, the trade would be called what type of trade? Midband, right? Because it came into much like the short side here, only to the short side, kiss and roll, kiss and roll, kiss and roll. Here we're bouncing, right? We pull back and we bounce. We bounce minimum criteria, we bounce midband. In the case of a deep retracement in an uptrend, would go to where? Down into line 2. So it's the reverse of what the short side is, right? into support, bounce long, mid-band bounce long, deep retracement bounce long. Normally at Pat, in the minimum criteria trade, you would put a region box using Object Trader underneath line 6. The trigger entry would be closing above the box in line 6. So in the case here of the box to the left, the trigger along would be that bar right there. Depending on when you drew this box to the right, the trigger would be on the close of one of these bars right here to get long on a market order closing outside the box above line 6. Everybody see that? Okay. Now, for the purpose of the rest of this webinar, we're about halfway through the webinar. What we're going to do, we're going to launch into some exercises here, okay? I'm going to start off pretty easy, and I'll work a little bit on ES, and then I'm going to get into crude oil, Russell, and some other markets, okay? And we're going to look at, I'm going to show you, we're going to reconstruct real time on the chart. In fact, I'm going to set it up right now. And I'll slowly advance the chart as if we're looking at the market together in real time. And then when you think you see a trade, and I'm going to start off real easy. You don't have to say long or short or anything. You're just going to type in a T. Okay? I'm going to start off super easy. Super duper easy. And then, you can type in if you think you know what kind of trade it is. If you think it's a short, type in an S. Okay? If you think if it's a long, go ahead and type in an L. If you're not sure, just type in a T. Okay? Now I'm going to go back. Let's see. This would have been late the Asian session on the 7th. I'm going to reconstruct the Asian session and the early part of the European session on the evening and morning of the 7th. And I'm going to start it right here. Everybody ready? So once again, you can type in a T if you're not sure what type of trade. When you think you see one. If you think it's a sell short trade, you type in S, right? If you think it's a long trade, you type in an L. Here we go. Here we go. All right, starting right now. So this is the evening of the 6th going into the morning of the 7th. Okay, now we're getting into almost midnight. There's midnight right there on the 7th. Okay, there's 1 o'clock in the morning. Now you're 1 hour into the European session. So the markets in London and Europe, large financial institutions are trading ES overnight here. Okay, 1:10. Going into 2 o'clock Pacific. Okay, moving on, 2:15, 2:30 a.m. You night owls, if you're awake. 3 o'clock, 3:27. Coming up on 4 o'clock Pacific time, still firmly into the European trading session on the morning of the 7th. Remember, when you think you see a trade, you're typing in a T or correspondingly S or L, short or long. 4:30 a.m. 5:15. 5:50. Getting ready. About another 40 minutes to the open of the equity markets in the United States. So there's 6 o'clock. 6:29. U.S. market, equity markets are opening right now as we speak. 6:29, 6:30. 6:32, you're 2 minutes in. 6:37. 6:42. Remember, when you see a trade, right, you know what to do. You think you see a trade, type in what you think it is, or just plain T will suffice. 7 a.m. Pacific. 7:15. Okay, and that's it. How'd you do? How'd you do? Did you get them all? All right, let's go back and reconstruct. Now, I started to show this market. Jim, you caught two of it? How many? Tell you what, here's what we're going to do. I'm going to show them all, and then you sort of self-grade yourself, because I didn't track. We got so many T's and S's and all manner of things coming in. I couldn't track all the letters. So I'll go back and show you each trade, and then you can grade yourself on how you did. So let's start off over here, and let me start with this question to make sure we're all on the same page in regards to how these trades set up. Are these bars right here a minimum criteria trade, yes or no? Five seconds on the clock. You remember what defines a minimum criteria trade, right? On the short side. Does that meet the criteria? Yes or no? It's a yes or no. 4 seconds. Two seconds. All right, time's up. Now let me explain it this way, and so there's no confusion about this, and I'm going to do it this way. Here's probably the best way to do it. Let me show you minimum criteria trades, which clearly meet the criteria without question. Those would be located here, and so this was your first trade, by the way. As I was advancing the chart, you should have typed in an S right here, right at 1:10 a.m. Pacific. In fact, if you recall, I paused for about 30 seconds here, giving you plenty of time to look at these bars form and type in an S. Because, first of all, we can clearly see that we are in a downtrend, right? Background is solidly red. Midband and all the bands are stair-stepping down. The bars are predominantly red. We are getting lower highs and lower lows, and so we are looking for shorts. So that would have been the first thing, is to identify the market condition, downtrend, shorts only. So you would be typing in S's, right? And here would have been your first trade at 110. Here's another minimum criteria trade over here, where the bars, you need the bars to really get above the stealth line here, right? And line 6. They've got to get into here. So what's going to happen is they're not going to get quite to the midband, okay? But they've got to get up above here. Now, you could make the case over here. You could say, well, Charles, by your definition, this is right at, it's clearly above stealth. Okay, so check mark on criteria 1, right? And they're technically on line 2. You see the difference between this box to the left and this box to the right. Can everybody see the difference between these two and that one? From a technical point of view, you could say that you're right on the cusp of meeting the criteria in the fact that those two bars are right on, you've broken above stealth, you are in a retracement, and you're closing on line 2. So it's marginal. You're right on the cusp, right on the edge. As it turned out, that worked out. You got a scalp out of that trade, so it was a good short. There's other cases where, let's look at this example right here. Let's look at another one that is not a minimum criteria trade. Do these bars meet minimum criteria trade? No. So nobody should have typed in an S or a T right here, right? The S and the T's were here, and here at 4:11, 4:30 in the morning. Midband trade short was right here. Should have typed in an S for short trade, or a T if you weren't sure, right here. 6:30 a.m. Pacific, going right into the open of the equity markets in the U.S. Beautiful trade worked out. Are these minimum criteria bars? What say you, team? Yes or no? 2 seconds. Just type in a yep, no, yep, no. Y or N. 3 seconds. So everybody should know this by now. 2 seconds. These bars. Yes or no? Y or N. 1 second. Boop. Time's up. No. Here again, it's a marginal situation. Here's a marginal situation. Marginal situation. So how do you handle those? If you take a trade like that where it just barely meets the minimum criteria, if it was to come down, and let me explain this. You can, if you have a very precipitous sell-off like this in this great big downtrend here, if you get into it and it does something like this, and then all of a sudden, and you got your stop way up here, 12 ticks up here, you're gonna, and it starts exhibit behavior like it wants to go up here and go take your stops out. You keep a very tight stop. You're gonna put your stops like right here, no loose. Technically, that's really not a good trade to take because what I'm trying to tell you is by the time a bar closes and you get into it, so let me explain the reasoning behind what we're doing. To get into, say, this box right here and you're closed on a market order on the close of that bar right there, how much meat on the bone is there to get any kind of profit where the established swing is located right here? Could you conceivably even get a scalp trade-off between this bar and this support level? Is there enough room here to even get a scalp trade? I don't know. Probably not. You're gnawing on the gristle, Jim B. That's right. There's no meat on the bone here. Okay. Now let's contrast that. How about the distance between this midband and the swing down here? Is there any meat on the bone here? In other words, when you get into these trades on the short side in a downtrend, your anticipation is you're at least going to get back down into some kind of swing level to give you some profit on the trade. There is sufficient, quote unquote, meat on the bone to make some money. When you have these minimum criteria and they're just not even getting up hardly a couple of 6, 8, 10 ticks off the bottom here, by the time the bar closes, a fire market order and a little slippage, there's no meat on the bone right here. 250? Well, I just explained that, David. Right here. I said it was right on the cusp of being a minimum criteria trade. Did this bar close above? Well, no. You have to have bars close above stealth and line 6. Did this one qualify? You're actually closing right on. Did it turn out to be a good trade? Yeah, it did. And that's what I'm trying to explain to you. It's a similar condition up here. It depends on how you drew the box. I mean, if you drew your box like this, I mean, looking back, hindsight's 20/20. You can look back and say, well, yeah, of course, the thing fell off the map. But, let's see what happened to this one. Well, this one might have stopped you out, depending on where you had your stop. Did it get it? Maybe not. So is this another minimum criteria right here? Does that meet it? Well, are you above stealth? Check mark 1, yes. Are you above lines 2? Check mark, yes. Are the bars closing up here? Yes. Is there more than one bar? Yes. So yes. Okay, cool. All right, let's go up here. And the last one was right here. All right, let's go back and recap and see how many you got right. In our downtrend move, we are disqualifying this one. In fact, when I opened the chart and began to show you the chart, it was actually sitting right here. So we didn't even start counting until over here. All right, so let's count together. One short, minimum criteria. Right? That's the first one. You should have typed in an S for that. We said no on that one. So let me just make it clear so we don't get any confusion about what we're counting and what we're not counting. That was not a counting one. This was not a counting one. This is an example of a no. Could you take it? Yeah. How would you manage it? Tight stop. We're trying to, it's like any rule that you have sometimes when you're doing things, sometimes you're going to have exceptions and sometimes you won't. Sometimes things are right on the line, sometimes they're right on the border. But, if we're going to toe the line on teaching this so that people can understand what we're trying to show here, then we got to toe the line on what it is and what it isn't. And as far as those two X's are concerned, those are no's. There's a third short right there. These are a no. This is a yes. Fourth short right here. And as far as we're concerned from a technical definition point of view, that was a no. And the fifth one was over here. All right, now how many of you got 5 S's? Show of hands. Anybody get all 5? Okay. Show of hands, how many of you got 4? Show of hands, 4. How many of you got 3? Show of hands on the 3. You got 3. Okay, it's all right. Okay, no problem. How many of you got 2 of them? Show of hands. Anybody get 2? Okay, we get some 4s. We got a couple of 2s. Got some 3s. Got a lot of 3s. Got a 4. How many of you just got 1 of them? And that's okay. No judgment. Judgment-free zone here. I mean, that's why we're having the webinars, and that's why we do all the teaching, so you learn how to see them, right? You know, you're here to learn, and we're here to help you see them. Quite a few 1s. Okay, cool. Excellent. Now, let me ask a question as a follow-up before we move on. We're going to do this exercise in the Russell in just a second. Is there anything that's holding you back from seeing them? Feedback from the team here. Is there what might be holding you back from seeing those? Because we spent a half an hour explaining how to get in those. So each time that you see these bars, and here's the reason we do these exercises, is that when you're watching a market in real time and you're looking at a market coming at you, whether you're in the live room or not, it's going to go like this. Now, I'm probably 30 times real time. So what does that mean? Well, the time between here at 1932, say this is like 11 o'clock at night or whatever, 10, 12 o'clock at night, and here is like 3 hours. And I showed it in like less than a minute. In reality, this took like an hour to get from here to here. So let's just reconstruct this real quick. There was the short. That was not 1. Okay, I'm going pretty quick now, right? So this is 340 to 420. This actually took 20 minutes to get these bars to form, but I'm showing it in like 15 seconds. There's one right there. One right there. So here, I'm going to do another exercise. I'm going to do a different exercise. I'm going to do this differently. Instead of having, and I think I have a pretty good sense of what the issue might be, or issues. One of them might be is that when these bars, see, I guess in my mind, because I've seen these charts like 10,000 times or 20,000 times, so when these bars get up into here and up into here and up into here, I immediately, like, my brain triggers and says, ding, 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 trade, ding, 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 trade, ding. You get it, right? Ding, 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 trade. So here's what we're going to do. We're going to do this differently. This next exercise, here's what I want you to do. If we are in an uptrend, and I'm going to see how well everybody does this, okay? If we're in an uptrend and we hit this this line, which is line 6, right? Or we hit here, and we're not going to be precise about this. I just want you to look for physically where the bars are. And I'm going to do an uptrend. Or it hits here, you type in a T. Irrespective of what you think it is. Okay? Let's get the Russell chart down. Let's do that exercise. Let's try that. Well, let's remove sort of the thinking part about it. There's absolutely, almost literally going to be no thought. I mean, either the bars are on hitting those lines or they aren't. And when they are, you just simply type in a T. Are you ready? I'm going to try to make it easy so that we can get the feeling and understanding of how this works. Okay, I'm going to advance the Russell chart, and I'm going to help you out here. Okay, we're going to be in an uptrend, so you're looking for longs. And when it hits one of those 3 areas, you type in a T. This is Friday morning at 9 o'clock. Are you ready? Yeah, Lewis, you did great on that last one. Yeah, you did great. You did great. Ready? Here we go. Remember what we're doing with this exercise is, right? Ready? Here we go. Okay, we're starting here at 9:24 a.m. Pacific. Don't type in a T now. Okay, I see that it's at the mid-band, but we're just starting the exercise. The exercise begins now. T when it hits one of 3 lines. 6, mid, or 2. Ready? Here we go. Okay, 935. Gonna blow this baby up real big. $9.53. $9.59 coming up on 10 a.m. 10:02. 10:03. 09. 10:10. 10:14. 10:20. 10:31. Make the bars even bigger. Make them big as I can get them. Oh, shucky darns. I just screwed up the chart. Oh, boy. Hang tight, hang tight, hang tight, hang tight. Where am I at here? What the heck did I do? Ooh, help me out here, Mr. Man. I think I lost it. I think I got it back. Stand by. Okay, we're back. We're back. We're back. Sorry. Let's pick up where we left off. Right at the exact same spot, 1024. 1029. Yeah, there we go. Okay, here we go. Sorry. Just bipped that chart a little bit in the wrong way. Sorry about that. Okay. Okay, there's 1034. Remember our exercise. T when it hits what? Right? That's our exercise. T when it hits what? 1041. 1045. Now we're right at 11 o'clock. 11:30. 11:39. Get out of here, CC Cleaner. I know. I'll do that later. 10:37. Right? 10:40. 11:51. And there we're right at noon. So we're coming up within an hour of the close on this particular morning on the Russell. Okay, we're typing in T's whenever what happens. Remember? That's our exercise that we're doing right here. Okay, there's 12:30. Almost coming right up to the close. 12:23. 12:32. We're almost at the close of the market now. And there we are at 1 o'clock. All right, how did you do, everybody? Now, the reason I did this exercise in the manner that I did was to help you see the retracements, not necessarily the trades, because those are two different things. But what it's occurred to me is that it's going to be hard for you to see a trade until you see what it's doing first. Right? Does that make sense? I'm going to pause this for 1 second. Stand by. I need 30 seconds. I'll be right back. Sorry about that. All right, so let's go back and count how many you saw, or how many we should have typed in. So if you recall, we started here, so this doesn't count. This is our starting point. So where was the first one? Right here. Here's how I'm going to review this exercise. I'm going to show where T's should have been typed in, and then we'll circle back and see whether it was a trade or not, because those are not necessarily two different things. Touching a line and a trade are two different things, yes? Here. 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 here, here, and here. Now, how many of these were trades? Because the exercise was touching. Yes, the exercise was touching. But how many were trades? Okay, let's count. How many were trades? Was this one a legitimate? Each one series of these questions are going to be 5 seconds on the clock, and they're yes or no questions. Is this a legitimate minimum long criteria trade? Yes or no? 5 seconds. This box. Should I put an L under here? Should this be the first long? Yes or no? 4 seconds. Just a wire and in. Boop, boop. Don't think about it. You got to have start to develop some split-second reactions here, right? Boop. Yes. Boop. No. 3 seconds. That's all it takes. A wire and in. Is this a legit minimum criteria long trade? Yes or no? 1 second. Okay, this will signify. It's kind of like a baby cake revealing. What is it? Isn't it pink or blue or something like that? Blue for the boy. Okay, I'm going to type in a 1 L. It's a boy. Yay! Yes, that's a legit trade. Did it close below Stell? Check mark 1. Chose below line 6. Check mark 2. Did you get more than one bar closing right on the line? Yes. Legit long trade 1. And you should have typed in a T, obviously. Okay, so maybe you got some of that, maybe you didn't. How about right here? Is this a legit minimum? Well, let's start with this one. This one's an easy one. Okay, this one's an easy one. I'm going to put a 2L here. Everybody, every single person in here should have typed in a T for this midband. This was a beautiful textbook midband trade, long in an uptrend right here. And that trade made money. Let me circle back to this one. Let's continue on. Is this a legit minimum criteria trade or not? 5 seconds, yes or no? Boop. 4 seconds. This bar, legit minimum criteria long trade, yes or no? 3 seconds. Wiring in. Doot. 2 seconds. This bar right here. 1 second. No. No. Okay, here's a different question. Did this bar close below line 6? Yes or no? Did this bar close below line 6? That is the criteria. Is that not the minimum criteria? I didn't say that it closed on it. I said that it closed below it. No. The answer is no. That wick of the candle does not count. This is a negatory, not a long trade. You shouldn't have typed in a T there. That's a negatory on that. Negatory, Big Joe. Not going to go. How about up here? Got 3 left. Legit? Yep. That's long trade number 3. Minimum criteria met. And then long trade number 4 at the midband. Right? Everybody should have definitely typed in a T on that one. That's a no-brainer right there. That's Wikipedia. Go to the Wikipedia and see a picture of a long trade at the midband. Look like that one right there. And number 5 is over here. Oops. All right, now let's circle back to this other one over here. Right over here. Okay, so right now, where it stands on this uptrend move on the Russell throughout the course of the morning, late morning, mid to late morning, from about 9:30 or so here, all the way into the close of the market, we are counting, as of right now, 5 long trades, 5 T's. Now, technically, from a exercise point of view, where we were saying just type in a T if it touches one of the 3 lines, you could have typed in a T here. Okay, in terms of the exercise itself, it did touch it. Yes, yes, it did touch it. So you could have typed in a T, but now circling back, was it a legitimate long trade minimum criteria retracement? Probably not. No. I really understand the difference of the exercise and legitimate trades. The reason I did the exercise the way I did was to help you start seeing, just visualizing where you should look to get in. And then as you develop the experience, to fine tune your mind's eye to see what meets criteria and what doesn't, then you'll come to learn that little wicks of candles like this do not constitute trades. You need more bars than that. You've got to have normally a collection of at least a couple of 3, 4, 5 or more, like these boxes right here. See how you have a lot more bars in here? I'm guessing there's probably at least 10 bars in here. Probably at least 6 or 8, maybe 10 in here. Probably at least 6 or 7 here. Wick of a candle. See the difference? You got to have the market has to, ideally, it doesn't always do this, but it's got to pause for a while and allow the bars to form in your support or resistance areas. Okay? One wick of a candle normally is not going to cut it. Okay. Now, could you say that this was a long trade? Yes, it technically was on the bars. You could have typed a T in. If you drew it like this, you never got filled. So this is a marginal 6. I would say you could have had 5 or 6 T's. How many of you got all 5 or 6? Counting long trades on the Russell Friday morning. How many of you got 4? Mario, you got 5? Any 5s? Counting 5s, counting 6s? How many of you got them all? 4, counting 4. Anybody got 4 of them? Okay, 3. Did you get 3? 3 would be half of them. That's okay. Anybody get half of them? 6. Okay. Ray got a 5. Albert got all 6. Chris got all 2. How many of you got at least 2 of them? 2 of the 5 on our long trade exercise here. Couple of 2s, lots of 2s. Couple of 3s. There's a 4. Okay, Jim, good. All right, good. Okay, that's going to wrap. Thank you for coming, everybody. You stop the recorder.